Welcome to Gradient's weekly business roundup. Today's episode will cover the following topics. The Appropriation Bill for 2022 was tabled in Parliament, detailing an allocation of Rs 2.5 trillion for ministries and departments. Defence received the largest share at Rs 373 billion, with healthcare receiving Rs 153.5 billion. Education expenditure is at Rs 127 billion. The second reading, which is the budget broadcast, is to be held on 12th of November 2021. The World Bank projects Sri Lanka's 2021 GDP growth to be 3.3%, noting that although Sri Lanka's medium-term outlook is clouded by pre-existing macroeconomic weaknesses such as high debt burden, large refinancing needs, weak external buffers, plus consequences of the COVID-19 pandemic, a gradual recovery will likely lead to corresponding improvements in labour market conditions. According to the country director of the World Bank for Maldives, Nepal and Sri Lanka has done well to vaccinate more than 50% of the total population so far, and the government is now focusing on targeted measures to prevent further COVID-19 waves which could dampen the economic recovery. The IMF also lowered its initial 4% 2021 GDP growth forecast for Sri Lanka to 3.6%. Sri Lanka welcomed 13,547 tourists in September 2021, an improvement compared to the 5,040 tourist arrivals in August 2021, with India accounting for 63% of arrivals. The beleaguered tourism industry received a much-needed boost, with France-based Condé Nast Traveller magazine placing the country amongst the top 5 best countries in the world to visit, and the Global Wellness Institute highlighting the country as a top 5 wellness tourism destination. Net credit to private sector rose by Rs 134 billion in August 2021, up by 75% on a month-on-month basis, reaching Rs 6.79 trillion. Year-to-date, net private sector borrowing accumulated to Rs 625 billion, surpassing the Rs 374.1 billion granted in the full year of 2020. Credit growth is likely to remain strong, with the central bank keeping interest rates unchanged in October, whilst reiterating its commitment to maintaining the 4 to 6% inflation target. Moreover, Sri Lanka's gross official reserves declined 27.2% month-on-month to $2.6 billion in September, equivalent to 1.8 months of imports. The dip in reserves is likely to have been caused by repayments amounting to $1.4 billion during the month. In other news, business and individuals operating in the passenger transportation sector are to receive an extension in the debt moratorium on capital and interest till end June 2022. Last week, the government relaxed maximum retail prices on milk powder, wheat flour, LP gas and cement, requesting suppliers of such items not to raise prices to unnecessarily high levels. However, Litro and Loves Gas plc announced price hikes subsequently. Legal approval has been granted for number portability among telecom service providers in Sri Lanka, which is the most important first step in the process. The all-share price index at the Colombo Stock Exchange ended the week to 14th October at 9,621.65 points, down 1% from a week earlier. Foreign selling persisted, with net foreign outflow amounting to Rs 218.3 million during the week and reaching Rs 45.3 billion year-to-date. In other market news, Haley's Leisure plc sold off a 0.47% stake in Royal Ceramics plc at a per-share price of Rs 47.40. Hemas Transportation Limited sold its entire shareholding in Spectra Logistics Limited to GSC Logistics for Rs 1.275 billion. And that's a wrap for today. Hope you have a great day, stay safe and stay healthy. This video is co-produced by research consultancy firm Gradient Alliance and information design studio Atheno.